sea-wise, closer to home, across to Nompu, live at the JSE.
Thanks very much, Francis. Yes, well, we see that the resources counters are taking a big hit right now. We'll get into that in a moment when we speak to Makwe Masilela. But you did mention the consumer price index having risen for the month of June year on year by 6.3%. That was in line with market expectations. That compares with 6.1% rise in May year on year. But despite it rising, it doesn't seem to have affected the rand that much. A higher inflation print would normally mean that would be rand negative, so we should have seen the rand weaken somewhat, but it's pretty much more or less where it was in the morning. And then the other issue as well, as you mentioned, the IMF downwardly revising economic growth globally, and for South Africa specifically, they think that we're going to grow at about 0.1% in 2016, which is a really dismal number. Part of this is really the UK deciding to leave the Eurozone. They say, but for the UK deciding to do that, they would have actually upwardly revised global economic growth. And in local company news, we hear that Kumba Iron Ore produced 15% less iron ore in the second quarter. That's probably all to do with the fact that there's a lack of demand for the raw material that produces that helps produce steel. And as a result, the market did not like that, with that stock seeing declines of about 6% earlier in the day. Let's take a look at the indicators. All right, I'm joined now by Makwe Masilela. He's from BP Bernstein. Thank you very much for joining us, sir, as always.
Pleasure.
The IMF downwardly revising global economic growth, and also for South Africa as well, saying that the UK exiting from the EU really going to cause economic ructions across the globe. What are your thoughts on that? And obviously, it looks as though the markets have taken heed of that as well.
By all means, and I think those are the kind of news that you don't want to hear. But I think we have to be honest. Yes, the market have reacted negatively to that, but we have to be honest. That's what they think is going to happen, you know. And I think it will depend mainly on the policymakers' actions, what are they going to do around the globe, the central banks, what they're going to do. Already we've seen the likes of Japan with the Prime Minister coming in after winning the elections, that we expect them to put some more stimulus. The likes of China, given their growth that was not that impressive, we expect them to do something that side as well. The likes of the ECB, and back home here, depending what we do tomorrow, you know, when it comes to Reserve Bank. So for me, is they think that is what will happen, but for me, the most important thing is the reaction from the policymakers. What measures are they going to put in place to make sure that at least the global economic growth doesn't go down by almost 1% or so?
Now, I did mention that the resources count is not doing very well. Anglo-American down nearly 8%, Lonmin nearly 6%, and so on and so forth. All of them are in the red. I take it this is all about the fact that economic growth is not looking so good.
Sure, by all means. And the strengthening dollar as well, you know, that was not good for commodity prices. And we've seen even from the results of those companies, I mean, the likes of Kumba, the likes of Anglo-American, even Billiton itself, you know, I mean, they just showed us that the production reports were not that good. Hence, we see the commodity sector struggling.
Now, the strength of the dollar comes from the fact that markets now believe that the Fed will raise rates somewhere down the line,
sure,
later in the year. But why would they raise rates when global economic growth is looking very dodgy?
Sure, that's a catch-22, but if you also check the IMF report yesterday, they maintain the U.S. economic growth, that it will continue to grow the way they expected it to grow. So it's only other countries that will struggle. So that being the case, and you know, there is this thing, what we call the Citibank Surprise Index. So far, I mean, if you track data coming out of the U.S., the economic data thereof has been surprising on the upside, the retail sales numbers, the housing numbers. So data coming out from that side shows that, yes, the U.S. is still on the way to be able to grow at decent rates. Hence, this whole thing of them raising interest rates is back on the table.
And let's look at a couple of counters, specifically Kumba Iron Ore. They produced 15% less ore. Presumably, there's an obvious reason why that happened, but the market reacted very negatively earlier, dropping by about, the stock dropped by about 6%.
Yes, and we know that the production from Tabazimbi, they're no longer producing anything from that side. Given that the iron ore prices were not looking that okay, given that the economic growth is not that great, hence there's no demand for steel. If you also check their export sales and their domestic sales, they've dropped as well. So it shows you that that sector continues to struggle, and the prices of iron ore make things even worse. Hence, they will even lay off almost 81% of their workforce because things are not happening from that side.
If you're an investor who's in for the long haul, is resources still a place where you would invest, you know, in anticipation of the future?
It will depend on specific companies. I mean, say maybe Anglo American, an example. We know they're trying to sell almost half of their assets to try to raise almost 3 billion to settle their debts. So depending what the company do, you know, we know Billiton, they are focused that if they get sorted out on their issues with Brazil, they might turn things around. So it will be from one company to another. The likes of PPC, you know, if they get things right, manage to raise whatever money they need to raise from their rights offer, get those factories to be up and running in Africa, that might be another one to look at. So I think it will be company specific, not the sector itself.
And Astral Foods earlier, their producers of poultry, indicated that they're going to have to cut production on the back of the drought. That's really causing havoc in the market.
It is, and one can also read that even from the CPI. We've just seen the food prices. I mean, they've just gone up, you know, so it's not looking okay. And the fact that they're using maize as one of their input, I mean, so the cost thereof has been high for obvious reasons because of drought. And the guys that are trying to see what is it that they can do to make sure that they continue to survive. And bear in mind that we also had these imports coming as well, so that also had a negative effect on them. So yeah, if this doesn't work, they promised us that they will continue to take other measures to make sure that they survive.
You've got 20 seconds. The Reserve Bank decides on interest rates tomorrow, up or down or stay? Hold.
Stay, hold.
Okay, thanks very much, Makwe. That was Makwe Masilela. He's from BP Bernstein. After the break, Francis will have more business news for you.